Welcome to another Trade Your Way video. Today we're going to talk about backtesting. We're going to delve into it in a little bit more detail. I'm going to give you some examples and apply them to my three strategies. So I'm going to find them live in the market and we're going to backtest, and I'm going to show you exactly how I backtest, how I take these trades, and how, hopefully then you can use this video as a reference point and as a guidance for yourself when you are either copying my trades, my strategies rather, or perhaps even just doing your own strategies. But the principles are the same in effect. So a lot of people are asking about backtesting, and I don't think a lot of people have a really good grasp on exactly how to start backtesting, and whether their backtesting is as thorough and as detailed as it perhaps should be. So hopefully this video will help you with that. So without further ado, let's dive in. Let's have a look. So as you can see here, this chart, this illustration. I love an illustration just to give you a visual aid. This is what I call the triangle of success. So the three elements required to be a consistent trader: risk, strategy, which gives you the edge, discipline, so stick to your plan, follow your strategy, keep your risk controlled, job done. Not as easy as all that, but that's the basics of it and the essence of it. So hopefully with a bit of structure and with what I'm about to show you, hopefully you can apply some of this to your own trading. Also, I'm going to keep it relevant to a prop firm challenge like FTMO, because at the end of the day, it seems to be the theme at the moment. It seems to be the fashion, the fashionable thing, the trending thing that people are doing. A lot of people working from home, people are trying to take these challenges and pass and become a funded trader. And so just following on really from my last video on how to pass the FTMO challenge, but then not only how to pass it, but how to keep the account and be a consistently funded trader once you've passed. So this just follows on from that. So let's have a look at what I want to talk about today. I'm going to cover how much I risk per position. So risking 0.25% per position times 2, so total risk is about 0.5%. As most of you know that trade with me in the Discord group and in the Telegram groups that I've got, if you do follow what I'm doing and follow my signals, follow my analysis, you'll know that I always have a T1 and a T2. So a T1 is generally a risk to reward 1-to-1. So if I'm risking 30 pips, I want to make 30 pips before I take partial profit and before I perhaps move my stop loss to break even. And then a minimum of 1 to 2 risk to reward for my T2. Now I'm going to use gold as for some examples today. And so my last trade on gold, my T2 was about 360 pips. So that was a pretty decent target, if you like. I mean, my stop, I had it set up as a swing trade because with gold I've recently been trading it, been swing trading it, so allowing me to have a larger stop loss. So the stop loss on that for that trade was 100 pips, and I did actually take some profit a bit before the T1. T1 was 1820, my entry was 1836, previous structure was 1830, so I took about 60 pips. But repeated that trade a few times, so I managed to bag about 0.5% on it, so I was quite happy about that. And then moved the stop to break even before it spiked up and took us out. But then the following day or day and a half, it did eventually drop, break, and go down to T2. So anyway, let's go back to this backtesting. I think for anyone who's backtesting, you need to These are the rules really, or these are my suggestions, if you like. Backtest 100 trades over the last 12 months. So look back, pick an instrument. So it could be the pound dollar, it could be gold. Have a look at it over the last 12 months and try and find your strategy. So for me, it's simple. I have my three strategies. If you're following my three strategies, try and find my three strategies. Today, I'm going to give you examples from all three of them. So you can then look at my three strategies YouTube videos, and then you can cross-check with this video, and you can see how I've given some examples in those videos, and if you're not clear, then you can see how I do it live in a real market environment, and hopefully you can put the two together and it will give you a greater understanding of my three strategies. So backtesting, I would suggest that you look over the last year and try and find 100 trades in total. Now, how you want to do this is entirely up to you. You can, if you have 2 or 3 strategies, you could split those 100 trades between the 3 strategies or 2 strategies. So if you had 2 strategies, you could say, I want to do 50 trades on that strategy and 50 trades on that strategy. Or you could say, if you've got one strategy, just do 100 trades on that strategy and collate the data. Now, to delve into it in a little bit more detail, what I suggest you also do is you backtest it on multiple time frames, perhaps starting with the 1 hour, and then do the same again on the 4 hour, and then repeat the process for the daily, the weekly, and the monthly. So if you want to be really, really detailed, really meticulous, and spend a few weeks doing this, you could take 100 trades on your 1 hour chart, 100 on the 4 hour, 100 on the daily, weekly, and monthly. So you could have taken 500 trades over a year, over a 12-month period, which is realistic because it's a year. And if you're an intraday trader, that's something that you might well be doing. Again, up to you. You could do maybe 20 or 30 trades for an hour, 4 hour, daily, weekly, monthly. Or it could be that the weekly and the monthly you don't find that many setups. So you may not have 100 trades. You might only have 10 for the monthly and 10 for the weekly, or even less, because at the end of the day they're monthly charts. So maybe in total, having done so many on the 1 hour, on the 4 hour, daily, weekly, and monthly, you might have taken 100 trades in total, and then break it down. It might be 10 for the monthly, it might be 20 for the weekly, it might be 30 for the daily, it might be 50 for the 4 hour, it might be, it could be something like, 60 or so for this. So actually 60 there, could be like 20 there, 10 there, 10 there, 10 there, something like that, just equating to about 100 trades. So how you do that is entirely up to you. It doesn't matter too much. So as you're going along, just see how you feel. As long as you are backtesting, and as long as you do get about 100 trades over the 12-month period, that will give you a very strong indication as to your hit rate and your risk to reward, and they're the things that you're looking for. So for my strategies, my 764 strategy, for example, gives me 75% and hit rate, and the risk to reward is about 1 to 3 on average. My divergence strategy is about 1 to 2 risk to reward, but it has about an 80% hit rate, so it's a lot more accurate. The MT is used more often because it's in trending moves, momentum. That has about 67% hit rate, but the risk to reward is greater, so 1 to 4. So if you take a couple of decent trades with that, you could bank the whole move and literally hit your T2 with that strategy. So they have pros and cons. So that gives you an overview of how I like to break things down and how I like to look at my my plan of attack when I'm backtesting. And this is the stuff that I've done over the years. I'm more about forward testing now because I've done a lot of back testing over the years. But this hopefully gives you a good starting point. So let's have a look at a table that we could use. So just to give you an idea, you could have this at the top, or you could put this at the bottom of each strategy that you use, but I like to have it at the top, and it'll have things like 100k, so you could put this in pounds or dollars. I've just worked it in pounds because obviously that's the currency that I tend to use, but for the FTMO challenge this would most likely be $100,000. So an average win, I've just done the last sort of 10 trades on gold. I've just stuck with gold. I've just stuck with the 764 strategy for now. What I was going to do 20 trades on the 764, 20 trades on the divergence, and 20 trades on the MT strategy, and then maybe go back to see which one was more successful, and which one I liked best, and which one just seemed to work better, and then maybe use the 40 remaining trades to focus on improving or gathering more data just on maybe the divergent strategy or the 764. So again, it's subjective in terms of how you collect the information, but I'm sure that any backtesting that you do and any information that you gather is going to be powerful, it's going to be relevant, it's going to give you confidence to take these trades, to get into the market when you see the setup, not hesitate. So things to consider then, once it paints a serious picture of how much you're winning and losing. So average win for this is my 764 strategy. You know, it's about 1,500 quid average profit. Loss was about 500 or so. So it's about 0.5%, about 1.5 profit. That is about a 1 to 3 average risk to reward. Total wins is about 70% so far. So 7 out of 10 so far. 2 losses, 1 break even. So hit rate's about 70%. Also, in terms of total gains, 6.1, so just over 6k. It shows you how much profit was made, how much lost it, and also you're accounting for the compounding. So here, for example, where is it? So you made 0.5%, made 525, but lost 529. 0.5%, because it's based on the compounded interest. And then here, this section is about your comments, which I haven't filled any of it out because I've already done it elsewhere on my other journal, my actual journal. So this just to give you an illustration of the sort of points and sort of some of the headings that you might want to consider. Drawdown's a key one as well. So hopefully that helps you. Also, just to show you, for those that haven't seen it, you know, this is my current this is my trade journal. This shows all the trades that I take and I've taken over the last this year so far. For example, it gives you some idea. You know, comment section. You know, I write about how I feel, what time I took the trade, and then, you know, hit rate, winners, losers, shorts, longs. You know, you can include as much or as little detail as you wish. Really, it's entirely up to you. But again, that's just for illustration purposes. In terms of wanting a journal, well, I'm going to upload it to my Box server, so my cloud, and also my other journal, you know, backtesting results. This here, if you want a copy, just send me a message to my Telegram, which is at ALX_TYW. So then you can get hold of that. Okay, so let's that's all the information. So let's dive in. Let's do some live examples so I can apply some strategies. Okay, so this is gold. This is a daily time frame. So what do I do? So first off, I've got my awesome oscillator. Really important. This helps me to establish divergence when prices. These are, you know, volume bars. Sometimes you'll see this sort of a volume indicator on the side of your chart. Some traders have it here vertically positioned along the right or down along the left. For me, I have it here. So they're histograms. I mean, the software that I use is different to this, but for illustrative purposes, I'm using TradingView because it's clean, it's bright, and you can see. So what do I do? Right, well, my strategy is all about the Fibs. So you can look, as I say, you can go into my playlist and you can have a look at the strategies. I'm going to look for, I'm going to look at this range. This is what I would do. This is my daily. So start with my daily, generally, if it's a day in a week. Look at my range, look at what's price doing. Well, we've topped out, so there's the high. We've pulled back, and then we've made a new low, and then we're just kind of consolidating. So first off, I take my fib, take my high. Where's my low? Not there. It's here, isn't it? It's double bottom here before it took off. We could use that one or that one. Which one is it? 48.8, 48.84. So 48.8. So there we go. That's it. So that's the current range that we're now playing in. Okay, so we've established a range, and this is what we're going to be looking at. This is where all the action's going to take place. So let's see. What would we do here? Well, we've had a retracement up to the 38.2. So I would have been maybe looking for some longs on a retrace up to here. But because we're in a bit of a pullback and a downtrend, I'd want to see what happens here, and I'd want to then short it back down again. Now, this is why I have a T1 and a T2, because you can see this move didn't just bounce off the 38.2 and then drop. Didn't quite reach, did it? So and also to the upside, it didn't quite make it to the 38.2. It kind of stalled and fell ever so slightly short. But had I taken a trade on this based on this small daily candle, bearish candle, I may have gotten in here, shorted it for a T1 move, which could have been anything from like 30, 40, 50 pips. Stops would have been just above, and then away we go. And so maybe we would have hit a T1. In terms of what strategy that is the MT strategy. What is the MT strategy? Well, that's about momentum. So momentum is in a sharp downtrend. We've had a pullback, and we keep going. So this pullback, you could have measured this pullback, you could have done something like this, and this would have been a momentum as well. So looking for some sort of a retracement to that 764. In this case, we stalled at around the 61.8 before dropping sharply. So you could have looked at something like that. Again, that's MT, so you look at my strategies to understand what MT is all about. It's about identifying the move, then we wait for the pullback, and the pullback will be a retracement to 38, 50, 618, 764, and then we short it back down again with the momentum, with the trend. So here, now it's settled a little bit, it's gone up here, short it. Now what happens next? Let's see what happens with regard to the next few candles. So next few candles, I'll just be looking for the setups. Okay, so that's just dropping down. Okay, let's stop it there. Let's see whether this is going to go down and test this low area here. For me, this looks pretty decent in terms of a buying opportunity potentially if it stalls around that 764. So what I'll do here is what I would usually do is pull these fibs back, because you know that's the bigger picture. We've established the bigger picture. That's the low. That low is 1848. So until that low gets taken out, that's going to be the low. Until that high gets taken out at $2,000, 2,075, that's going to be the high. So we'll pull that back. We keep these fibs on for reference because you know it's always useful to see what sort of range we have. But I'm interested here now. I'm interested in applying my 764 strategy. So I'm going to look at this range. I want to drill down into this in a little bit more detail. And this is it's a decent range. You know, it may not look a lot, but it is. It's how many pips is that? 1848 up to 1933. So we are looking at about 850, about 850 pips or so, an 850 pip range. Because this is a daily, you don't realise, but it's actually a massive move. So what we've had here, we've had a little bit of a drill down here, and we tapped the 764. So would I have entered on this position at 764 to go long? Well, no, not yet, because you have to take into account that it's a daily chart. Now the problem and the issue that a lot of traders have is that they're not patient. They're not patient enough. They're always sending me messages, and they'll identify this sort of a setup, and they will say to me, you know, Alex, can I get in? And you know, this is 764. You know, where should I buy? Where should I get in on this? And I'm like, well, it's a daily candle, so you've got to allow it to finish, and then see what happens. Don't just jump in prematurely. So allow it to make a move, because the whole point with the strategies are to allow you to get the best possible entry. But timing is very important, and my strategies, if applied correctly, they help you to get into a perfect trade where you have minimum drawdown. So what happened? Well, we went down, we tested 764. You could have probably taken a little sneaky long off there if you wanted to go back up, and you know, you could see it bounced a bit and gave you sort of 100 pips move back up. That's fine. But we wait for the next day to play out, and then what we would do is we'd drill down to a 4 hour and a 1 hour to find an entry. So this is the daily, the following day, and it's gone down and it's stabbed down through. It's stabbing down through. So you can imagine everyone trying to get in long here. All these buyers that come in the evening or during the Asian session want to just take a long because they just assume that this is down. They always try and catch the low. The amount of trades that try and catch the bottom or the tops of a move, it's ridiculous. There's no idea how to do it. They just take a stab or take a punt. But with these strategies and that I have here, so if with divergence, we would wait for it to come down to my 127 or my 161 before we buy it back up. And we'd be looking for divergence on my awesome oscillator. So this is the AO, awesome oscillator. In this case, same principles apply. Look how it reacts at the 764. That's why it's in red, because it's a key area. It's the last position, last fib level before we retrace fully 100%. And if it gets to here, chances are we could actually make a new low. So what's it going to do? Let's see what it does. So not a trade, still bearish, and we're waiting. There we go. So this is the following day. Okay, so the following day, you could drill down and you could go into a 4 hour chart or a 1 hour chart, and you could find your entry, and you could say, okay, this is shot up. So depending on what time of the day it shoots up, and depending on when how much it's moved up by, you could potentially say, okay, I'm going to buy on a 4 hour, using a 4 hour chart or a 1 hour chart. I'm going to take a long, and you might get in at somewhere like 1874, for example, and you might take a long position. It might look something like this. And so stop loss, where would your stop loss be? Well, people always ask me that. Well, what I say to everyone, depending on which time frame you're using, see, I'm using a daily for illustrative because it's just cleaner. But if you was on a 1 hour, and these are 1 hour charts, 1 hour candlesticks, my stop loss would either be in one of two places, depending on my risk. It would either be at the low of this move, which is at around 1860, so you could move it to there, or you could put it at the low of the day. If you're on a daily chart or a higher time frame, a 4 hour chart perhaps, you could just tuck your stop in just somewhere like that at the bottom of that candle, and then your entry would be there. And then where would your target be? Well, your target would have to be back up to a 76.4 retracement ideally. And of course, this is why I set two targets, because what I would do here is I would then I'll pull these back, just like I've done there, pull these fibs back, keep them on there for reference, because I want to know where I got in. But I'm going to focus on this area now. I'm going to use my fibs and flip my fibs. And so I'm always moving my fibs. My fibs are dynamic, they're not static. We move them, we adjust them. So you see what I've done here? I've just plotted brand new fibs. I've kept my other fibs on my other, there for reference. I might put them on another time frame, so I might not have them all cluttering up here. But just to show you how I'm applying these fibs to the upside and the downside and the upside, one thing you need to note is that it needs to be, the 0% needs to always be your starting point. So here you go, 0%, 1860. That's my low. So where's my high? Okay, my high is back up to 1933. Where's my 764? 1916. Good. Okay, so I'm going to set my target to 1916. So we're getting in at around 1878. My stop loss is going to be about 18, you could say 64, you could say 1865 or 68, depending if you want to take it at the bottom of the body of the candle or the low of the wick. I mean, for me, I tend to be, with this sort of price action and it being a daily candle, I would probably bring my stop right up to the body, the lower body, which is the opening price as of midnight. So that would be around 1868. And then my target would have to be, my T2 rather, would have to be 1916. There you go. I might even round that down a little bit, just to be on the safe side, because it doesn't always get there. It's not an exact science. So I might just take 10, 15 pips off. If I've got a move like that in play and it plays out, I've made enough profit. So I'm not going to be aggressive in that respect for my target. So that's how I'm going to do it. Now, in terms of two targets, my first target would be the 38.2 if I got in down here, which would allow me to get up to where's this? Let's flick this so you can actually see my fibs. This is a 764 strategy that I'm showing you, and let's change the values on this. Let's pull this up here. What is that? Oh, here we go. So labels, we want to go right. Let's put them on the right so you can actually see them. There we go. So drill down again, and what you'll find is that I'm entering here. I'm taking a long. I'm using my 764 strategy of this last range. So we've curled over. We've completed an N shape, and then we've had powerful rejection. We had this candle. It was all bearish but very small, trying to stop hunt, suck in a few sellers, liquidity grab, and then this one today we're showing bullish price action. So we're buying this off the 764, trying to get the best possible entry. In terms of a stop loss, you have a few choices, depends the time frame, but you could tuck it in behind the low, so here 1860, or you could tuck it in behind this low of the day, which is around 1864. Or for me, because it's a daily, I would just want to put it at the opening price, because at the end of the day, if this comes all the way back down and starts to test the opening price and start turning bearish, then really that's where I want to be getting out. So often the good thing about the 764 strategy is that it allows you to really pinpoint not only your entry but your stop loss as well. And so my target is back up to 764 of this current range. So we got in with a 764 strategy of this range, and we're getting in and we're looking for 76.4% of this range, and this is my 764 strategy. It's the beautiful thing about it. If you were short here, for example, with 764, looking for the 764 to the downside, and you caught this move, you would have hit your target to a T. So you make your money that way, and then you wait, and then you apply it again to the upside of this range. It's great. You could just find 764 strategies all day long. It's so good, so powerful. So let's just see now. Let's see how this one plays out. So we're in, and we're seeing some good movement, and it's come down to test our stop. So with a move like this, I would take some profit. So we went up about 50%. I would take some profit, and I would now be adjusting my stop loss to break even. So that's a risk-free trade. But I would have already. Doesn't matter which strategy I'm using, which one of my three strategies. I always have a T1 and a T2, and I'll always try and take some profit. So I will have already banked profit, and I will have already moved my stop to break even. There you go. So it's stabbed down, and the fact that it's stabbed down, that's quite nice. So it's done. It's confirmed. It's gone down. No harm done there. It's going up. We'll move our stop, take some profit, and let it fly. So now it's a risk-free trade. What you could do if you really wanted, is now look to manage your risk, to manage your profit. So you've taken some off. Try your stop loss if you want. You could try your stop loss again. This is all very subjective. You've got choices. This is about you, about how you trade. You could then move your stop loss below the wick of this current candle. So around 1887, 88, which is pretty much around a T1, which would secure you a decent 100 pips profit. T1 and half of your position's already banked, and the other half secured. So no matter what, you're going to make a whole 0.5%, 1%, whatever the risk is. Or if you want to be a little bit more aggressive, just say, right, well, I want to secure it a little bit more, so I want to move my stop up to tuck it in below the opening price on the daily. So thereby securing another sort of 60, 70 pips, which for me, I would probably do that because I want to bank it all and get as much in as possible. We've secured a decent move. We've made some money. It's just a case of now, how much money are we going to make? So let's see what happens. So for me, I've brought my stop up to about 1895, and there you go. See, this is exactly what happens. What did it do? Well, it hit our target, and then it fell over, and it sold off hard. So T1 done, T2 done, right to my 764, and this is one example of how the 76.4 is such a powerful trade, such a powerful strategy. The 764. This isn't just coincidence. This is like, all I've done is randomly. It took me all of like maybe 2 minutes to pull up gold and to look for 764, and lo and behold, I found multiple 764 trades, basically. So 3 trades, if you want to look at it that way. There was one that came down. Which came down to there. So there's one. Then there was the buying back up. There was this one that went up. I mean, it's 2 or 3 strategies over a period of a few days. 2 or 3 good trades where you're making a couple of percent. That's all you need, really. And on a large account, remember, you've got 100k there. You're making 2, 3, 4, 5k. If you do that a few times a week, that's your work-life balance sorted. It means you're trading less. It means that you're trading with quality as opposed to quantity. It means that you can spend 80% of your time on yourself, self-development, meditation, backtesting, family time, gym, exercise, sleeping, box sets, chilling out, downtime, going out, enjoying life, holidaying. And 20% is just putting some trades on. 20% is like, okay, there's a 764, setting up, let's take that trade, bosh, done. Okay, we've made our money, managed to stop, managed the risk, trail the stop loss. Okay, great, hit T2, T1, T2, done. Don't need to trade anymore for the rest of the week. If this is only a Tuesday, you can take Wednesday, Thursday, Friday, Saturday, Sunday off, and even say, you know what, I'm going to go on holiday. I'm going to go away for a few days. Obviously, if we're not in a lockdown and everything's normal, they're the sort of things that I would look to genuinely do. And that is how you should be thinking, and that's how you should be trading. So let's carry on. Let's just see what else there is setting up, and let's see. Okay, so again, stop hunt, liquidity grab, big stab down. Let's strip this down now. Let's pull some of this stuff off because it can clutter. Let's just give you one more example. Let's just see, shall we? Let's just see how everything played out. So this here was good. Okay, that was good to the downside, and then we went up. So let's have a look at this though. Let's have a look at this bit of price action. Let's just pull the fibs on this. Let's see what sort of a pullback we had. And also let's remove that. Okay, perfect 618. A perfect 61.8 pullback. Touch, tapped, went, confirmed. So corrective pullback of this range, 61.8. No coincidence. It was a perfect fib retracement of this move. Maybe again sucked in some sellers and then bounced up. Cleared out a lot of stops. A lot of profit taking when it hit the 764. You could have shorted off there and made a killing. A really nice move. Just shorting it back down again off the 764 as you saw. And then it broke. It, absolutely broke. But I just wanted to highlight that because I had a feeling that it was going to, I've not looked at this. I'm not cheating. I'm not. I'm taking some fresh charts, fresh pair of eyes. I'm just going through it and I'm just showing you what I see, how I trade, how I apply my 764 strategy, and that's it to a T. So now because we've broken all of this price action and we've broken out the previous high, the reason I didn't remove these is because I don't until like I just said to you, unless the high is taken out or the overall low is taken out, I'm not going to take my fibs off. I'll keep them on a weekly chart maybe or a monthly time frame, but I'll always have this broken down fibs plotted on this range for reference. So now we're going up. We've broken the 38.2 properly. So where's my next target? Where's your next target? What do you reckon? 1962? Yeah. And what do I say? Well, I like to be conservative. I'll round it down. 1960, nice round number. That's it. That's exactly what I do and how I would think. And this was a 764 strategy being played out to a T. Now we've broken. This is what we call in an MT strategy, a momentum strategy, with the 764, because the 764 gave us our entry here. Now, had you perhaps not trailed your stop loss up and you hadn't been stopped out on the spike down, or had you re-entered again, you could have potentially still been in this trade running. You might have left a small position on. Now, this is where it becomes certainly subjective in terms of how you trade and how you manage your risk. And, there are going to be traders, 100% there's going to be traders out there that got in here, had a very little drawdown, and they just let it run because they're looking for the bigger picture, which is, in this case, they could be looking at something like $2,000, 2021, or the 50%, 1960. For me, back to previous structure, back up to here. With this strong bullish move, I'm going to be jumping all over this, getting positions on, trying to buy it back up to 1960. So let's see what it does. Does it go above 1960? Does it top out? Does it break? Okay, so it's a doji candle. So it was a smaller move. It was finishing off the move. I think what's going to happen next? Will it go down from there? Because that's indecision, not much volume, but it's pretty much done what we wanted. Pretty much tapped out at 1960. Pretty much exactly that. So money being made there. Good opportunities. And you just need a strategy, you just need the correct risk to allow you to jump into these positions without worrying. You could sleep well at night, having a position open and not stress about it because you're managing your risk correctly. So let's see what it does at that 50. So, okay, see, look at that. So that, it tapped the 50% and then it sold off hard. Okay, so this is MT. This is the MT strategy in play because we're still in this downtrend and we've basically just given it all back. I'm not going to go into it in too much detail. I'm going to leave it there because I think that's enough for you to get your head round in terms of 764, how I backtest it and how I would look at it and the tools that you need to actually, keep an eye, to collate the information and giving you a few options as to how. You've got to be flexible with it. Keep it really simple. If you want to get an idea of my strategies, please go on my playlist, have a look at the strategies that I've got and talk to me. Send me a Telegram message at ALX_TYW and we can talk about it and I can help you get your head around it. I'm not going to spend any more time on this because I think 35 minutes on this video is more than enough time to get your head around it. But I hope you find this video informative in terms of how to backtest and what you need, and then how you can forward test, and then also a bit of structure as to how you should be backtesting. Thanks very much.